Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for another daily cryptocurrency market update. If you are new around here, every single day at 1 p.m. UK time, we release an update just like this one to help you stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets, and that's exactly what we're going to be doing in this video. It is Monday, the 16th of October, 2023. And we have a lot to cover, as always. The cryptocurrency markets on this magnificent Monday have woken up rather perky. And I think this has a lot to do with the kind of rumblings surrounding a Bitcoin spot ETF. On Friday, the SEC failed to, or didn't, I should say, not failed, probably planned not to, launch an appeal in regards to the Grayscale's recent court ruling in relation to their conversion of GBTC into a spot Bitcoin ETF. The court was very much in favor of the fact that there was no legitimate reason that the SEC were putting forward to why a Bitcoin spot ETF in regards to Grayscale hasn't been granted. And I think looking at the fact that BlackRock, in terms of money that a lot of these asset managers have, tens of trillions of dollars in regards to asset managers and asset management companies, they're all filing for Bitcoin spot ETFs. And I think it's an inevitability that you are going to get one. One of the Bloomberg analyzers essentially said there's a 90% chance, in his opinion, that ARK's Bitcoin spot ETF is going to be approved on the 10th of January. We know the ramifications that an ETF has for the markets. We've looked at the SPDR, the SPY, the S&P when it had its first ETF, and the run it went on after that, of course, gold. And you've got to remember that, and this is one reason why I think that the SEC is dragging their feet, because this industry is not regulated. It's not necessarily legit from a Wall Street point of view. They may have been unofficially involved, but they haven't been allowed to be officially involved. This is essentially going to open that floodgate. And I think that's why the cryptocurrency market is being rather perky at the moment. But we are going to dive into all that. We are also going to be looking at this kind of risk on, risk off theme that we've been talking about. You guys will know that we were speculating last week that you were going to have a good time for risk. Gold's obviously had a very good time. The SPY, a lot of equities. However, Bitcoin didn't really bask in that sunlight. And of course, we had a phenomenal close for gold on Friday. And crypto may also be appreciating from that somewhat. So we've got quite a lot of cover. We're going to start things off with a Bitcoin chart. Bitcoin for me is still pinned under this 30 weekly moving average. You guys will know, and if you want to learn stage analysis, please do consider becoming a patron. It's something that we do teach as a good investment guide, technically, for people that are perhaps new to the markets. It will allow you to outperform your peers. Ultimately, we do think that Bitcoin has broken out and that the crypto spring has now arrived. It's a shame because the altcoin market for us has been a very tricky one this year. However, the other markets that we've called and the general sentiment, which is risk doing well this year, I think has been largely warranted and actually proven. However, crypto being a higher beta, more risk in a very sort of uncertain time, sort of waking up a little bit slower. But we do assess absolutely that crypto is moving on to higher ground. Now, whether that comes in the form of having to have a deeper correction and fulfilling this sort of head and shoulders that we've been looking at, remember we've got an inverse head and shoulders that's been forming since sort of 15K down here. Whether we need that deeper correction, that deeper C leg down here or not is still to be seen. As of right now, it is positive price action that we're seeing. However, we're still very much in a range as far as I'm concerned that we do need to get above. And we really need to see that before we start to get too positive. If you lose the sort of 25K level, that's going to be your neckline. That's going to take you to the downside. If you take the 30K level, that's going to see further upside. And it is a great day that Bitcoin is having. For me, you really need to take out this local high before we start to get excited. That would be the first positive sign and then see that continuation. We are rejecting. You could be putting in a double top here. There is still the sort of downside scenario at play. But we looked at risk generally last week and we said, actually, given how the dollar closed on the prior Friday, not last week's Friday, the one prior, it suggested maybe a bit of an okay time for the risk markets. And actually, if you look at where risk, and I'm talking about equities, gold, and other such things, bounced, it all took place right around your 30 weekly moving average, which we'll dive into. You guys know that we ultimately have higher targets for the S&P, for gold, for risk genuinely, Bitcoin, and we do think that will come. The dollar has been very, very strong, and you can see this dollar weakness has very much aligned with the rally that we've been seeing for the equity market, this year certainly. And then, of course, we've seen equity weakness, risk weakness on the back end of a very strong dollar that's, of course, correlated to inflation. You can see risk has adjusted to the downside. And we are looking for a turn in this. Whether it be short-term or not is still to be seen. But there is the possibility that the dollar could correct deeper. This is going to tie in with our broader thesis on things, also the macro thesis that actually lags take a while to play out and that you won't get the recession instantly. It's going to take a while to filter through, potentially end of 2024 into 2025 is our kind of time period. And the markets will do well during that time period. We're really just looking to see what happens with the dollar. And you did have some positive signs coming out of risk, gold, and the equity market up until, I think, really for me, it was where they didn't bid anything on the 30-year treasuries, which kind of signals that they're prepared to continue to be tight with monetary policy. And of course, you've had a kind of strengthening dollar on the back end of that. Bonds in a lot of trouble. I think the bond market is driving monetary policy more so than anything. And that's why we've seen the response that we have from the ECB and also the UK, where they've actually decided not to go further ahead with rates. So there is a lot going on. We are trying to keep you up to date on all of it. But so far, the plan that we've kind of set out for the markets this year has really been followed. We are just waiting for that kind of next leg up for Bitcoin, that next leg up for crypto, and we think altcoins are going to do very well on it. However, it's going to be correlated with the dollar and risk doing well and a kind of risk on period coming back around. And this week, we've not got a massive amount of data. There is some significant data, but more so, we want the dollar to roll over. What I want to do is actually look at the dollar against other currencies. Remember, the Dixie is majority against the euro. And actually, if we look at the dollar against other currencies, let's do the Great British Pound to start. You can see it is running into areas where you would expect resistance. Certainly the Japanese yen, it's at new all-time highs. We can see the dollar rolling over a bit and actually allowing for a bit of a risk-on period. If you look at it against the euro, you're at a sort of key point of resistance here. And that could tie in with kind of what we were looking at last week in regards to risk having a kind of decent time ahead of it. Of course, gold selling off slightly today, but a great run. For me, gold's just in a big bull flag that we ultimately think is going to take it to 3,000 or around that sort of $3,000 mark. This is going to line up with the S&P and where we think it's going, and also the kind of thoughts that we have on crypto spring being well and truly here. This is a rather interesting chart. This is Bitcoin in regards to on exchanges. And you can see here that actually most bull markets will coincide with Bitcoin leaving exchanges. Now, this makes sense. In a bear market, Bitcoin's often hitting exchanges because it's being sold. In a bull market, people will often self-custody and move it into their own wallets to hold on to. And you can see that the Bitcoin supply has really been getting taken aggressively off of exchanges, even though we don't trade on-chain analytics. I think we saw a real fallibility with them in the bull market. They are certainly something that we pay attention to, and we don't just do on-chain, and we've got APIs that we're looking to integrate for not just Bitcoin, but for the crypto space more broadly. A lot of your layer ones, we watch a lot of what's going on, certainly in regards to stablecoin flows and other such things. So, interesting. Today, we actually did an article. For those of you that aren't already aware that we do have a website and a news outlet, we are aiming to compete with the bigger sort of outlets like CoinDesk and so on and so forth. And we've had a great response. We actually did an article today, and I think this is important to pay attention to. There are lots of kind of booby traps around the crypto space. I think one of them, of course, is FTX and the liquidations that are going to happen there in regards to their holdings, the kind of estate. And I think a lot of people forget this. The US government holds $5 billion in Bitcoin. And you can see this is the current holdings of the US government. They hold 194,000 Bitcoin. That's estimated at $5.3 billion. And they hold around about 1% of the world's Bitcoin supply. And of course, this is obviously as a result of the Silk Road seizures, which is actually my first introduction to Bitcoin was around about the Silk Road days. It was not me personally, but a friend of mine. And this friend, I can't remember their name, description, or anything of the sort, but they were actually using and playing around with it. And that's when I first heard about Bitcoin. And then, of course, the Bitfinex hack. and of course James Ong's seizure in March 2022. So they have a lot. They have actually previously sold, and I'll leave a link to this article in the description, Bitcoin via Coinbase. And I do think they'll continue to do this, but I actually think it's largely going to be an over-the-counter thing, not an open market thing, but certainly something to continue to pay attention to. So let's see what happens for crypto. You guys know that we've done a lot of diving into a lot of different things, macro, micro, and everything in between. We're really just in a range right now and waiting for the break of it to either the up or the downside. That's going to play into the short-term longer scenario or the short-term correction scenario. The only trades that have any leverage on at the moment for me are Tesla and Grayscale's GBTC. There's a 16% premium there that we think is going to get closed, certainly with all the CTF stuff. We've been long it for about a week now. It's been a bit of a tricky one. Of course, Tesla, a little bit volatile, but they've got earnings coming out. Going to be interesting to see what happens there. And yeah, I think that is really all we have for you guys. Altcoins will pick their feet up eventually. We'll see how the stock market opens today. Let's take a look at how it actually closed on the daily. Yeah, you can see you rejected here at the same point that the dollar found strength at its sort of 30 daily moving average. So let's just show you that quickly before we wrap things up. You can see the dollar gained strength here. This could be a bit of a double top scenario. You really need to see a breaking of this. Just quickly. I wouldn't really say that was a retest. It's showing quite a bit more strength than we'd like to see. We did look at a possible neckline, but we don't think that's the case. So the dollar found strength at the same point that the S&P, saw some weakness. It needs to push through this and continue to the upside. And certainly once you start taking these highs out, you're going to get a lot of people re-entering and a kind of risk-on period that we're looking for potentially on the dollar pulling back. But we could be totally wrong on that. Gold doing well, so on and so forth. I think that is really all we've got for you guys. I do apologize about the video quality. However, we never really have the best video quality. We do have cameras and all sorts of things that we will be. I was trying to find one, integrating, and hopefully that will come when I'm back next week. If you've enjoyed this content, a like is always appreciated, so as a comment, and I look forward to seeing each and every one of you in the next one. Thanks a lot for watching, guys. I'll see you in the next.